All right, so again, we're going to talk about what you have to do through this program in order to be successful. So let's start off with the first part. So you signed up for the program, you get your email, which gives you your logins and stuff like that. Now, the first thing is that you have the Funder website. Okay, fundertrading.com. Hold on for a second, fundertrading.com. Now, this is the main website. Now, I don't have a login to the website myself because I don't. Maybe I should ask for one. But basically, when you log in here, when you click here, that takes you into the. Let me see if I got one. Maybe I do. Oh, actually, I do. Huh, never mind. I guess I did have one. Maybe I don't. I think this is just a generic one. So yeah, so I don't have the actual login, I don't think. Let's see. Yeah, that's the one for just if you just register. All right, so let's see. Do I have a dashboard? Let's find out. No, I don't. Okay. So when you're logged in, you have a dashboard, right? You guys all have a dashboard. So when you log in, you get to see your dashboard. It shows you how many trades you've done, you know, where your P&L is at, things like that. You also have video resources. Okay. Okay, now I can actually see my TRAC9. So this must be the one they set up. Okay, I guess. Oh, no, no, this is just showing me what it would look like. Okay, I guess. Okay. Let me see. Maybe I do actually have one. Oh, I do. I didn't know I actually had a login. I guess we created a long time ago and I forgot about it. Anyway, so this is my dashboard. I clicked on it. It's processing right now. Let me just go back to the dashboard. Come on. There we go. Um, it's comfort. It's not my audio. Something's going on your end. Can everyone else hear me? Okay. Okay. So comfort. I mentioned this before. There's something going on with your audio. I don't know what it is, but yeah. If you're having audio issues, guys, it's not. It will have to be. If most people are hearing it just fine, then there's something wrong on your end. It's either your something wrong with your internet connection, something's interfering with your software, like maybe you got something running in the background that's clipping the audio. It could be anything, but that's it. I mean, other than that, there's nothing I can do to fix what's on your end. So this is when you log into, go to fundertrain.com, you log in, you have this login page, right? This is your dashboard. This is all of those things, right? The portal, I'm not sure if that's what they call it. I honestly, Elizabeth, I don't know what they call it on that end, but this is where you end up. So these are the stats. As you can see, I have no stats because apparently I haven't been doing anything with this account. Okay. Um, this is where you submit a ticket if you have any problems. Okay, so if you're having a issue with TrueEdge, submit a ticket. If you're not sure where to find certain stacks, submit a ticket, right? My trading metrics, if I click here, that takes me to prop reports. When I log into prop reports, this is what I see. I see everything, right? Reports, live prop traders, trade performance, whatever, right? So I basically see whatever is there. Group trade performance, whatever. That's what I see. You guys don't see the same thing because you don't have the same access that I do. Okay? Now, so that's prop reports. So get to prop reports. Let's do this again. What I did was I went into the funder dashboard. Hold on for a second. Not sure why this is taking so long. But I went to my funder dashboard, right? Well, I won't do that today, but I went to our funder dashboard, right? And I clicked on my trading metrics. Now, this is the main page. This is where you're going to see the majority of your stats, right? So this is like your basic bird's eye view, number of days traded, winning trade versus losing trades, aggregate max drawdown, profit and loss, round turns, profit target, like it's going to show your progression to there. You got it, right? So it says here, I need $4,945 to get there. Okay, not sure how that, I guess I did one trade and I guess I made something. I don't know. So this is showing the dates, right? Reset cutoff, all visible, right? Now, if you're not logging into this, then you have no idea where you're at in your challenge. So first things first, the first email you got when you signed up is giving you a complete walkthrough of the resources. It's telling you where everything is. Now, what most of us are doing that I've noticed, not all of us, but I would say probably more than half of us, the only thing we're doing is jumping into the coaching room. We're not actually looking at anything else. The problem with that is that when you jump into the coaching room, you actually don't know what you're doing. You're here, but if you never actually went through the resources, you have no clue. So therefore, there are going to be lots of questions like, hey, how do I see my trading stats? Hey, what's this thing mean here? Hey, what does this mean? Hey, what does that mean? What does that mean? What does that mean? Which means you haven't done the work you're supposed to, which means I'll send you back to, the book and say, hey, go back to this, restudy that. Now, obviously, the more questions I have to answer that are not necessary, the less we'll be able to actually concentrate on what we're here for in this room, which is to actually identify trading opportunities. Which is, if we didn't do that, if I didn't actually point out opportunities and point out stocks that are moving and things like that, if we didn't do that, then there'd be no reason to run this during market hours. I'd just wait until afternoon, say, okay, guys, what questions do you have about things in general? But we have the help desk for things in general. The help desk is where you send the ticket or you send the email, which will get you the fastest response. If you're not sure about, like, hey, something's wrong with my password, something's wrong with the software, I'm having a hard time changing the chart, something's wrong with this, that's where that is, right? That's what they do. My job is to focus the attention on finding opportunities, which means what I'm doing is looking for trading opportunities. For the entire time that I'm here, during the morning, that's what I'm doing. I'm looking and I'm looking, I'm evaluating. So if someone says, hey, what do you think about this stock? Sure. If someone says, hey, did we get to T2 on this or T1? Sure. Those are questions that are aligned with the purpose of this room. The purpose of this room is not trading 101. The purpose of this room is not, I didn't look through the stuff I was supposed to, but I just want someone to tell me on the fly. That's not what this is. Now, I say that because if you don't use these resources as they're intended, you're basically making your life harder. And of course, if you really aren't doing some reasonable degree of study, then you're making everyone else's life harder, because it's like, man, another person asking the same question again that everyone already knows the answer to. Right? Got to think about it that way. It's not all about me, or you. It's about, hey, this is a group. We're trying to do something here. So just like a classroom, we got to work with the system, right? Can't be, hey, let's start me from scratch. I didn't want to spend any time. Let me just sit down and ask all these questions. So that's what this video is for, to get us all aligned on where you should be at, in case it wasn't clear. So if you want to do resets, that's where you go. If you have a live account and you want a payout withdrawal, that's where you go. Premium videos, these are the more advanced videos. Free videos, they're not technically free. but these are the basic videos. You watch these two video groups, you learn everything. Correct. Your passwords may not be the same on TrueEdge as here. So if you're not sure what your password is or username, that's where you would ask the help desk. Exactly, Elizabeth. So I don't know if I'm assuming your usernames and passwords are not exactly the same for the software. They shouldn't be. They should be different, right? So once you're here, which is your login for the website, not your login for the software, this is where you got your main resources. So this is where you download the TrueEdge Trader Pro. This is the user guide. Live prop trading room login. This is where you click to get here, of course. My Trading Metrics. This is where you go to prop reports. You have your login password for that. If you're not sure what it is, look in your email first. If you don't find it in the email, which it should be there, then you ask the help desk. Okay? TrueEdge channel subscription, market data subscription. These are things that they mentioned in the email. You got to sign for certain things. Okay? So I know this one you have to sign for. This one, I'm not sure what that is, but I guess we can click on it some other time. Payout withdrawal, I already went over that. Submit a ticket, I went over that. Premium stop screener research coming soon. This is basically something we're working on that would be an add-on for those who want to use it. Okay. Options dashboard. This is just to take you to the options dashboard if you have one. If you're not in the options program, then you don't need this. If you are in the options program, you click here, it takes you to your options dashboard. So these are your main resources. Again, fundertrade.com/dashboard/ get you to here. You can log in and then it'll take you to here. Okay? These are your basic resources. Now, let's go over metrics really quick. Okay? How are we going to get better as a trader? The way that you get better is by looking at your trade performance. So, if I'm going to look at trade performance, this case, I'm looking at you guys as a group, but this is not how you guys will see it. You will see it as individuals. You will only see your own account. So now I'm going to ungroup accounts. That means the people that are in the challenge, and I'm looking at the overview of everything here. If I click here, it says overnights only. That means that these are trades that some people have held overnight, which should be very few. But if this happens, just to make sure everyone is absolutely clear about this, if you hold any positions overnight, you get disqualified for your challenge, that particular challenge, immediately. So let me repeat that. Any positions that are somehow held overnight, somehow you managed to get the trade in, it didn't auto liquidate somehow, okay, whatever the case may be, even though we have auto liquidation, all these things that we put in place, if somehow, some way you're able to get around the system, which is possible, some people have managed to do it in very odd ways, but whatever the case may be, once they get that trade in and it's after hours and you hold it overnight, then that disqualifies you from that challenge right away. Overnight positions are not allowed. Now, this is where, unfortunately, a lot of times what will happen is a person will say, well, it's not my fault because my computer went down, et cetera, et cetera, et cetera, right? Okay, listen, this is the real world. This is not ideal world. This is not, the Barbie movie or something like that. This is real life. We're all adults. We're not kids. So since we're adults, we're responsible for our own actions. We don't say, hey, I decided to leave this trade on because it's supposed to get auto liquidated anyway. I'm stepping away. I got other stuff to do. Well, if you leave a trade open, yep, most likely it will get auto liquidated. We're not deliberately not doing it. But what's happening is apparently some people are finding I don't know how it's being done, but there's some ways some of us are figuring out ways to get around that. I'm not saying you're doing it deliberately, but so usually we get maybe one or two of these here and there. Okay. If you want to make sure that you don't have any problems, don't be in a trade unless you're able to watch it. When I say watch it, I mean you have to watch it every second, but you need to be aware of your positions. It doesn't make sense to just sit there and say, hey, I'm just going to leave this all alone and find out what happens. That's not the way you do it. Okay, so make sure you flatten your positions, exit them before you leave or before the end of the day. If you, for some reason, had to step away, emergency, whatever, contact the help desk and say, hey, I had to step away for emergency. I left some positions open. This is not, this won't happen again, but can you please exit? Now, the reason why I said make sure you don't want to get into the habit of doing this because now we're not like a concierge for your trading account. That's not what we do. You're responsible for managing your own trading account. So when I'm at Great Point Capital, when I was trading there or Global Prime, if I even remotely thought that they were going to say, hey, you know what, Mike, don't worry we'll watch your account for you. Nope, they're not going to do that. It's up to me to watch the account. That's what I'm there for, right? It's my responsibility, mine. Now, they had a system just like we do that would auto liquidate and all this other stuff. But the thing was, if I did anything that got me into a trade when I'm not supposed to be in a trade, that's on me. It was on me, and I never made that mistake once. Never, as in not once, ever. Why? Because I took it seriously. It wasn't a joke to me. It wasn't just, hey, well, someone else will take care of it. Nope. It's my responsibility. It's my destiny. It's my, why would I want to put that in someone else's hands? Why would I want to take the risk when I don't need to? Obviously, if there's some issue I couldn't resolve, I contacted them right away and said, hey, I'm stuck in a trade. That happened to me before. And what do you think they said? No problem. We'll deal with it. Of course they would, because they know it's not my fault, right? Okay. Yes, I would exit everything by noon Central Time, before noon Central Time, before. Exit before noon Central. There's usually no reason to even be in positions at the end of the day anyway. Okay, most of us are not doing anything that would even profit at the end of the day, so just be out of it altogether. Only be in when the going is good. So it is up to you to liquidate. I understand that sometimes software issues come up, etc. When those come up, we deal with them. We don't hold you at fault for something you can't do anything about. But if someone says, oh man, I forgot all about, hey, can you give me a break? No, we won't. We're not giving you a break. That's your first lesson. No breaks. Okay? No problem, John. Okay? So, guys, it's your responsibility. So, if you get stuck in a trade and you didn't contact us when it happened, and then you find out later, it's going to be on you. Just so that you know. All right, day trades. Let's look at the results. Here are the results of the day trades, right? Now, this is, of course, what you guys are supposed to be doing. This is a summary. Now, this is for the group, but your individual summary is going to have the same format. What this is showing us is all of the details of what happened per symbol, you know, wins, losses, wash trades, which means you broke even, win to loss ratio, average hold time, etc. How many shares on average, how many options on average. These are summaries. So when you look at your own report, it's going to give you a summary of what you did. This is your report card. And you want to pay close attention to your report card because it tells you all the things you need to know. Now, I'm not going to go into detail about this today because I already made a video in the folder, which is called Introduction to Prop Reports. Okay. I'm sorry, it's called it's called Intro to Prop Reports and why the win loss ratio is critical. So that's the link for those of you who are watching this on the video later. That's the that is the um, that is the video that explains about how to use prop reports. Okay, So basically, Prop Reports keeps a bunch of statistics about your trading. It summarizes what you do. It lets you know if you're succeeding or failing. Now, as a group, I know that almost every time I look at this report, I'm going to see that it's not succeeding. That's a given. Individually, however, I'll see different results. Some people are doing well, some people are not. But as a group, what I do expect, and this is just from the way this works, is the group is not likely to be profitable during the challenge at least. However, some of you will learn to be profitable. So as new people come in, the one thing I can expect is that even, as new people come in, they're going to fail. They're going to basically drag down the averages. The people who've been here longer tend to be pushing the average up. The people who are newer tend to push the average down. And of course, that's just the way life works in general in trading. So what this is showing us is that we have a net result of a loss of $18,000. Of course, this is on the practice account, so that's not real money, but that's the loss equivalent for the last trading session, with a batting percentage on average of 45.39% for the group and a win-to-loss ratio of 0.89. Some of the things that you're going to look for in your trading that you want to pay close attention to, the most important thing is your win-to-loss ratio. Now, I go over that in that video, but I do like to emphasize this over and over. That's your first step. So once you start trading, which you have to start doing something. I'm giving out alerts in the coaching room here. I'm saying, here's a stock that's going up, here's a stock that's going down. It's your job to say, okay, this person, Mike, has identified some stocks that are moving. He identified Coinbase, he identified JD, Baidu, or one of the people in the room pointed out and I confirmed that they were correct. Whatever the way, once we have a valid opportunity, something that's moving well enough and a strong enough bias where there might be some profits to be made, it's your job to actually enter trades. Okay? Now, I give you videos in the folder in this room that go over identifying trends, entries and exits, etc. It's your job to watch them and learn them, which means that you will have to spend time outside of the coaching session to learn what I'm teaching. So it's more important to actually learn this stuff by watching the videos and getting it memorized than it is just to watch stocks move all day. If you just watch stocks moving all day, even if they're doing what we want, if you don't know what to do with them, it's not going to be of any use. So the first step is to understand the gist of what we're doing, to know the basic rules of how to enter and exit the trade, how to manage your risk, but then you have to put it into practice. Now, a lot of us are scared to just try. We want everything to be perfect. But in order for you to learn this, you have to start applying yourself. You have to start trying to do the things that we're teaching. As you learn them, you'll get better, but most importantly, you'll start generating some statistics, some data. And once you have data, now we can actually look at it. You can look at it, as I described in that video for Introduction to Prop Reports. You can now look at it and actually figure out what you're doing wrong, which is what this is for. It's specifically designed to help you analyze your trades in a way that's more detailed than what you would do on your own and is accurate. It knows exactly what you did, when you did it, how long you did it, so you don't forget because it's all here. And then you have to look at it and say, okay, I need to advance and do better. So what I'm telling you is the first thing to work on is this, the win-to-loss ratio. All that means is you're looking at your average win versus your average loss. And if you are doing what you're supposed to do and managing your risk, you will cut losses at a number that's on average smaller than what you take profits at, meaning that you will control your losses. You will not let them keep going against you. You will say, look, I know for a fact that my average trade only wins X. Let's say the number is $71. If this is what I make on average, and I know for a fact I can't risk more than this unless my bat percentage is way higher than 45%. So once you know how successfully you're able to bat, to use the analogy, then you know that you can't afford to risk as much or more than what you're making on average. You have to keep your budget in check. So if you're going to succeed at this, it is a financial venture. You cannot spend more money than you make. So if you're spending more money than you make, that's the reason for the problem. That's how you lose, by spending more than what you pull in. So let me repeat that. The only way to lose money is you spend more than you bring in. As long as you don't do that, then you will make money. That's just the universal rule of business. Revenues have to exceed expenses. Losses are an expense, are they not? So if losses are expense, commissions are an expense. If I'm not bringing in more money than what I'm giving up to commissions and losses, then I've got a problem. Losses can be managed by cutting them off. That's the only way to manage them. You don't manage losses by hoping the market comes back. You don't manage losses by changing the settings on your technical studies to give you a buy signal when you know you need to get out. It doesn't matter what the chart says. It doesn't matter what the indicators say. Once you're down too much money, you have to exit. Regardless of what you want it to happen, even if the chart still looks fine, if you lose too much money, you still have to exit. So your only alternative is to go back and change the size of your trades so that when you get stopped out at the appropriate place, you don't lose more money than you can actually afford to lose. And as you continue to do that, then you'll be able to become profitable. The first step is to control the losses. The second step is to improve your batting average, meaning getting better at targeting the right times to get in, being able to better anticipate when to get in. But first things first is you got to manage the losses. If you don't fix that part first, everything else falls apart. This is the literal foundation, is the bedrock of all trading. You cannot succeed unless you can control losses. If you don't do that, you will fail. You will absolutely fail. You will unquestionably fail. You will have no chance of succeeding. And it doesn't matter how much you tell yourself or how much other people tell you it's different than that. It is not different. That is the absolute, undeniable gospel truth. You cannot win if you don't control losses. Period. End of discussion. If you don't accept that now, then you will never win until you do accept it. And hopefully you accept it in time where you can actually still have a chance to make some money, get a funded account, etc. Okay, so now we know that. So the rest of the stuff is broken down in the video, so I'll leave that for later. But it breaks down the symbols, how you did in each one. Obviously, if you know that you're losing money consistently in one symbol, but you're making money in the other, it would be smart to stop trading where you're losing and keep trading where you're winning. All right, so now we know what the prop reports are for. You have to get into doing some trading. Okay? The challenge is your chance to do something. The system is tracking what you're doing. Let that work in your favor. Get the feedback from the market. Let yourself see how things are working out. And if you notice that you're not doing well, look at the details of why you're not doing well. What are you losing on? Most likely what you're going to see is that you're letting losses go bigger than your gains. That's all. I mean, it's not even an if, it's almost guaranteed that you're going to see that you're letting losses go farther than your gains, consistently doing so. Just like if you see your bank accounts going down, you know the reason why, because you're spending more money than you're bringing in. Doesn't matter if you notice it, if it feels that way, the numbers are the numbers. So if I look and I see that, oh, I spent $1,000 on Uber last month, which I did, which is, I don't know how I did that, but I did. I have zero idea how I could possibly have spent that much, but I did. And it didn't feel like I spent that much, but I did. And I looked at the numbers. I said, yep, that's what I did. Fortunately, that's not normally how much I spend. Usually I spend a few hundred a month on Uber. But for some reason, which is why I don't really feel like I need a car, because what's the point? But if I'm spending $2,000 a month on Uber, then I might as well just get a car, because what's the point at that point, So my point is, It doesn't matter how I feel, right? If I feel like I didn't spend that type of money, but I did, then I did, right? No matter how it happened, I look at the numbers and they say that's what you did, right? Or um, a business expense, right? Um, about a month ago, I had a business for my other company. We all got together, and when I looked at the expenses for that trip, well, the conference and everything, it was way higher than it should have been. And I looked at it and I said, yeah, something doesn't look right. But when we went over the numbers, of course they were right. It's just it didn't look like we were spending that much, but we were. That was our mistake. Lesson learned, right? Didn't track the expenses closely enough. Would I be able to give some idea what best practices for batting average? Well, batting percent is based upon, well, first of all, you got to have at least a 40% bat. So that's number one. And honestly, if everybody managed their trades in a very religious, consistent fashion, your bat percent would most likely end up being close to 50%, even if you didn't have a good strategy. In other words, if I randomly choose buy and sells, I'm going to have a batting percentage that eventually gets close to 50%. Okay? So the batting percent needs to be above 40% because we're day trading, and if it gets below 40%, it's going to be very difficult to have consistent income. But your batting percent should approach 50% over time. You should be getting better at it. Some of you have batting percents that are above 50%, some of you are at 60%. Usually it's hard to maintain, but if you can maintain that consistently over time, then whatever you're doing really is effective. Yep, but what's your win-to-loss ratio? That's the bigger question. Remember this, so this is first, not that. So the bat percent I wouldn't be thinking about. I'd be thinking about this first. What's your win-to-loss ratio right now? I don't see it in front of me, so that's what I was asking. It's on here. W/L. That's win-to-loss ratio. It's right next to your bat percent. If you're on prop reports, you can see it. I got you. All right, so the most important stat is your win-to-loss ratio. You need to know that up front. You need to know what that is right away. Once you know what that is, then I can tell you right away if what you're doing is likely working or not. So, unless someone has a 80% batting average, there's no way they can win with a .89 win-to-loss ratio. You're going to have to bat about 80% plus to make that work, which is nearly impossible to do. Now, the reason why, yeah, so that's the problem. So what is that? So think about what that's telling you. If your win-to-loss ratio is 0.5, that means that you're letting losses basically go twice as far as gains. So the way that you're achieving the 53.8% bat is that you're not cutting losses. So if something goes a little bit in your favor, you're taking a profit, but if it goes much double the distance against you, that's when you're cutting a loss. Put a different way, if I buy a stock at random and I say which is more likely to get hit first, a $2 move up or a $4 move down? Well, of course, the $2 move up technically is more likely to get hit first because it's a shorter distance. Now, I'm not saying that that's literally how it works in real life. At times, the market has biases where it actually is more likely the stock goes down $4 than goes up 2. But at that time. But what I'm getting at is if we were using, let's say, a MACD as our entry trigger, what you're going to find out is that if you want to increase the win percentage on the MACD, all you got to do is increase the amount that you let the stock go against you. As soon as you do that, your stats go up. You suddenly are winning more often. It's really easy to do. So, I mean, I can even show it to you here. I'll show it to you rather than just talk about hypothetically. So, let's suppose we were to do this. Okay? One second. Let's take a chart on Thinkorswim. Okay? Here's our chart. What we're going to do next is I'm going to add, let's say, 5 years of data. Okay? And let's say that I add a study. I'm going to add a strategy. I'm going to add MACD. MACD strategy. There it is. I'm just going to leave the settings as they are. I hit apply. Now it's showing me a MACD strategy. No, your win to loss ratio should be at least 1.2 minimum. That's your absolute minimum. And the truth be told, you should be aiming for 1.4. Okay. Now, here's a strategy. I just randomly put this on the stock Terex. Okay. And I just randomly put this on here. Let's run a report. Here's a report from Thinkorswim on the strategy. This is a basic MACD strategy. Says here the max P&L was $1,464. Best trade. Total P&L was 5507. Okay, those are just the stats. Now, let's just say not P&L, your win to loss, win/L, not P&L. If you got 2.36 win to loss ratio and an 85% bat, then you basically are you're printing money if that's the case. So if your win to loss ratio is 2.36 to 1 and your batting is 85, you are absolutely printing money. So hopefully that keeps going. I mean, if you keep that up, you're getting funded for sure. That's a guarantee. You keep that up, even if it's not that good. If your bag percent drops to 60%, as long as you keep that 2.36, you can have a bat percent that's under 40. You would still win. So the point is, those stats are good. If you can keep that up, Nancy, yeah. Well, if you can keep it up, great. Um, but either way, just try your best to keep the numbers good. But again, focus on the win to loss ratio. So let's say I take the data here. I want to export this to a file. Let me put this into downloads. Okay, so I'm downloading this. I'll show you why I'm doing this in just a second. HTML. No, CSV. Okay, so I'm saving that. And I'm going to go over to my computer here. And I'm going to run some stats on this. Give me 1 second. And I'm just going to look for something here that can run some stats. Okay, here we go. All right, so okay, so I got to import that file. Let me see, duplicate trades analysis. Make a copy. All right. Let's see. Okay, delete that. Delete that. Okay. Support. Sorry, I'm just doing some stuff in the background here. I'm throwing this into some software. Replace current sheet. Okay. Come on. Okay, there we go. All right, so P&L. Okay, there we go. P&L. Copy. Delete. Paste. You guys, I know you guys can't see what I'm doing, so don't worry. I'll show you in a second. Okay, let's see. Sort range. Here we go. All right. We got that. Copy. Paste. Okay. So, according to the numbers, 1 second. Sorry, this thing's still calculating here. All right, here are the numbers. So this is for the strategy we just did, okay? For this MACD strategy. So here it is. So for this MACD strategy, here are the stats. This is not prop reports. This is something that I'm hoping to make possible for other people to use in the future. My company, my other company, Madison Trading House, this is one of the things that we're working on. Well, we already have it, but this is just a spreadsheet version of this. But anyway, so this is what I want to look at. So the win-loss ratio is 1.95 to 1. Win percent is 44.58%, right? And this did have a positive outcome on that particular stock, but if I were to change this to another stock, most likely the outcome wouldn't be the same. Okay, so this is basically successful because of the stock that was chosen, not because the actual strategy works. And one of the ways I know that is this part right here, the measured edge, which is designed to basically help me figure that out. This is basically telling me 0.162 is basically just a little bit better than what you would get buying the SPY and leaving it alone, which means that this MACD strategy doesn't have a strong edge at all. It's actually fairly weak, meaning that the majority of the results are based upon the fact that the market's moving and the strategy happens to be well aligned with the data that I'm looking at. But more importantly is this part right here. Now, I can modify this easily. All I would have to do is basically allow the strategy to go farther against me than it already is. Now, this strategy doesn't have any risk management programmed into it. It just buys and then it sells and it buys and it sells. But if I actually made some risk management strategies into it where I said, hey, if a loss goes more than X, then you're going to cut it off. Then if I did that, that would change these results to where they might look better or worse, who knows. But what I'm getting at is that anytime you let something go farther against you, it's immediately going to give you a higher bat percent. So this one is not controllable. I don't have a good way of telling it when to get out. I could try another strategy that maybe I could find in the list. I have to do it another time, but actually maybe I can find one. Let me see. Let me see if I can find one that actually has some rules on how much it can risk. So If it does, it's probably one of mine. And these are not strategies that, if you're wondering, can I use these? Actually, this is not in here. So I guess I have to look at my other Thinkorswim. Let's see. It's not in the Schwab, so let's see if it's in the other one. Let me see. I got one old strategy. It's not something, again, you want to try to use. It doesn't really work, but it was one of my first attempts to program a trading strategy, and I gave it risk parameters. Let me see. Share size. No, it's not it. Let's see. Let's see. Horde. Nope. Okay. I might have it somewhere in here. Nope, not that one. Revised MACD strategy. Maybe. Okay, actually this one has a stop. Okay, let me use this one. This one I think has a stop. So I gotta copy this. All right, so this one actually has a stop loss. Okay, so let me try that. I want to get rid of the first one, and I want to use this one instead. Okay, so this one has stop losses, so it's going to have different results than the other one. All right, so on the settings, let's see. I think this is a percent. Okay, that's a percentage. So it's saying the stop loss is 0.5%, right? So let's just look at this really quick. So the stop loss right now is at 0.5%, which means if the stock goes 0.5% in the wrong direction, you get stopped out. This up here is showing the P&L as of right now. It's down, sorry, $246.11. Okay, and remember, this has stop losses. Okay, now, if I were to go in here and change that to a different setting, let's say I make the stop loss 5%, 10 times the size. Let's see what happens. Now I'm suddenly up $5,476. Now what happened there? All that happened is I adjusted the stop loss to give me a lot more room to lose money. And because I gave it a lot more room, it actually gave me a different result. In this case, it turned out to be a better result. That's not always going to be the case, but in this case, it did. So I go here. If I go to 1%, let's see what happens now. I'm not changing anything other than the percent stop loss. Now I'm down 48 bucks. Okay. Let's change it to 1.5. What happens then? Now I'm up 4,000. Okay. Let me change it to 2. What happens then? Now I'm up 6,100. Okay. Let's change it to 2.5. What happens then? Now I'm up 5,600. Okay. Let's change it to 3. What happens then? Now I'm up 5,300. Okay, let's change it to 3.5. What will we get? Now I'm up 5,300 again. Okay, let's change it to 4. What do we get? Okay, now we're at 5,600. Let's change it to 4.5. What do we get? Now I'm up 5,400. Okay, let me change it to 5. What do we get? 5,400 again. Let me change it to 8%. Let's just see what happens then. 5,400. So what's happening here? Okay, what I'm doing here, Elizabeth, is I have a strategy that I'm running on Thinkorswim, the software Thinkorswim. This is a backtesting strategy. I'm backtesting something to see how it worked over time. Up at the top, I have something that tells me what the P&L would have been, hypothetically, if this strategy had been used on this particular stock over the last 5 years. So this is a backtest. Backtest just means you go back in time, you run a strategy over old data, over old history of a stock to see what the outcomes would have been. is generally something that's used to validate whether something shows potential or not. It doesn't prove that something will work. It just proves whether or not there's an opportunity, maybe. What I'm doing is I'm changing the stop loss. It has a stop loss value. The value I've changed the stop loss to is 8%. I was changing it. It was the default setting is 0.5%, meaning that if the stock, after the entry signal, if the stock goes 0.5% in the wrong direction, then the stop loss is triggered and the stock the position will be exited. The larger I make this stop loss, the more room the market can move. And what should happen is my win percentage, my batting percentage will go up as I increase the stop loss. Now, I can't see that currently because this doesn't have any display that shows me what my win percentage is, unfortunately. But if I were to put this down in a report and I analyze it, most likely what I would find out is that the more room I give something to move, the more likely I win. Okay, so in other words, the probability that a profit can be made of any size, it doesn't have to be a big profit, just a profit at all. In other words, if you get into a trade and you say, I'm going to risk $100 to make $1, you're going to have a lot more $1 wins because $1 is very close to where you got in. In other words, you get into the trade, and I'm talking about like in dollars and cents. If you buy a stock or sell it, whatever you do, if you are going to take a profit every time your position is up $10, and let's say you're doing trades that are in the, $30,000 position size or something like that, the chances that we hit a $10 gain before we hit a $100 loss are much higher. All the market has to do is fluctuate just a little bit in your favor. You're up $10, you take your profit. It has to go farther in the other direction to get to $100, right? So the markets always fluctuate. They always go up and down, right? If I look at this chart, right? If I look at any opening price of a day, like right here, that's an opening price, right? The market went up, it went down. So if I got into a trade at the opening of every single day, right at the opening bell, which you can do in the real market, you would do what's called a market on open order. And what would happen is it would fill at whatever the exact opening price was determined to be. So there's one opening price. Everyone who does that type of order will get filled at the exact same price to buy or sell. Everybody will get filled at the exact same price, the opening price. And once that happens, you're in. So once you buy at the opening price, which you can always do with 100% accuracy, you can buy at the opening price. So you buy the open. And let's say that your only rules for a trading system is if the stock, I buy 100 shares, and if I get a $10 profit, meaning that if the stock goes far enough in my favor to generate a $10 gain, I take the gain right away. But if the stock goes $100 against me, then I take a loss. If I ran that strategy on Thinkorswim, I'm going to win. It'll probably be like 90% of the time I'm going to win, maybe even more, if I ran on this particular stock. And all I did every single time was buy. Never sell, just buy. Now, some of you are probably like you're probably seeing the wheels spin in your head, say, wait a minute, I think he has a point there. And I do. It's a fact. But here's a question. Let's say you did that. Somebody tell me when you're going to lose on that trade. When do you lose? Anybody? How do you lose that trade? If I buy at the open, the market goes $10 in my favor, I take a profit. But there's even more specifically, Jeffrey, what's the exact scenario that you're really going to lose? There's an exact scenario that I'm thinking of. Correct. The market opens and almost immediately it flushes. No, not gap down because you're only getting in at the open and you're going to exit the same day. As soon as it goes $10 in your favor, you take a profit. Even if it goes $100 against you, take a loss. If you do that strategy, you would win the vast majority of the time, meaning that you will hit your $10 target most of the time, the vast majority of the time. But there are going to be other times where the market's going to go against you, and it's going to go against you too far, and you're going to hit that $100 loss. So in order for you to make money, you can do the math in your heads. In order for you to make money, you're going to have to win over 90% of the time, aren't you? Because every time you take that $100 loss, guess what happens? You wipe out at least 9 of your gains because every gain was $10. So it takes 10 wins to make up for one loss, to break even, just to break even. It would take 11 wins to make a profit for every one loss. So for every one loss you get, you need at least 11 wins to make a profit. So let's do a little math here. Let's make sure we're following this. So if I do this, let's do the math. If I win one time, or so if I lose one time out of 11, I get 11 wins. Well, actually, no, yes, right. I need 11 wins for every one loss. So, sorry, I did it wrong. So I have to do 1 divided by 12. Okay. So I'm going to have to win 90, what is that, 92? Hold on. Let's just do it this way. Plus 1. What's that? Yeah, I'm going to have to win 92. I have to win 92% of the time, basically. If I win 92% of the time, 92 times out of 100, then I should make money, right? Let me make sure I did the math right. 92 times 10 is 92, right? That's right. Yep. $920. Then I lose 8 times. 8 times 100 is $800. So I make $120. Yeah, but my point is this. It would work if you could keep that ratio, if you could keep the 92 wins consistent. It's a lot of trades, but it will still work. The problem with any strategy like this is that you don't know how many losses you're going to get in a row. In other words, a market can get on a big trend where 2 days in a row, it drops like a rock right from the open. So the market opens, it immediately goes down, then it opens again, immediately goes down again. Kind of like it did right here. Let me see. Right here and here, right? These 2 days, depending on the trade size, let's say you got in, the opening price was 93, sorry, the opening price 63.99. The high was 64.11. So depending on how many shares you did, you might have walked away with a profit right away because that's a 12 cents move positive. So if you had 100 shares, you got your $10 gain. If you had less than 100 shares, you didn't hit $10 first, right? So if you have 50 shares, basically the market went about $6 in your favor first, $5 or $6 in your favor, and then it flushed. And the next day, it opened at the high and went down again. So these 2 days in a row, if you had a $50 shares worth of stock, you would have lost $200 in 2 days. $100 down this day, and then definitely $100 down that day, just like that. If they went down $100, which they may not have, but either way, they didn't go up, so you would have had to exit at the end of the day at a loss. So on this day, it definitely went $2 against you, so you would have lost $100 for sure there. And on this day, it went about $1, so you would have lost about $50 here because it never went $100 against you. So you have to get out at the end of the day. So you would have lost 150 bucks 2 days, just like that. And you may have had lots of other days where you made money. So could that strategy work over time for a lot of stocks? Yeah, it could. It definitely could. But is it really a strategy that you would want to do? In my opinion, no, because you're not going to make enough money, first of all. And if you happen to catch the market at the wrong time, you're going to lose a lot. So I could pretty much design a strategy around what I just described. I've done it before, where I know for a fact I can. You guys ever seen these commercials where people show you like these back tested results and they show that line going up and it looks like the strategy can't lose? That's what they're doing. That's exactly what they're doing. Okay? It's not rocket science. It's just what they're doing. So if the market goes, if you're doing 100 shares at a time, if it goes 10 cents in your favor and you can exit at that 10 cents positive, as long as you can exit, then you make your 10 bucks. But they're letting it go way against them. So they'll show you, I got this 95%, 90 something percent accuracy, and our system is the best ever since sliced bread, and I make tons of money doing it, blah, 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 blah. Right? That's what they're going to tell you. Okay? That's what they're going to tell you. But in reality, what they're not telling you is how they came up with that report. And also another thing you need to keep in mind, they're back tested. So that means all I have to do is select a scenario. Like for example, with this strategy right here, I already know what all the results are going to be because I can run the test to find out. So if I say, okay, I don't like the results on that one, let me go here, change it to a different number. I'm going to make it 5. Then I hit OK, and now all of a sudden I'm up $5,400, and I can say, hey, look at my strategy. It's so good, it made $5,500. But I already knew the data before I ran the test. I already had the data. Now, how am I going to, in other words, is this stock going to trade exactly the way it did in the last 5 years, in the next 5 years? How would I know that? That's the problem. I'm taking past data and I'm curve fitting my strategy to the past data. But that past data does not necessarily reflect the future. So the strategy, if it really was going to work, I would have to know something more than just, hey, let me change these settings from 0.5 to 5 or whatever. This is basically the next part I was going to say is if you're going to get good at this, the main thing you got to pay attention to again is that win-to-loss ratio, because that's really where it counts the most. You have to make sure your batting average is at least 40%. Your win-to-loss ratio should be at least 1.4 to 1. And you have to apply yourself consistently over scenarios that are recognizable. In other words, if I could define a different scenario that happens across different stocks, where I can see this scenario happens consistently and it's definable, I can actually give it a way to define it. If I could do that, now I've got something. Now I actually have something I can exploit. Now, ironically, the strategy I described is an actual that's something that is definable. In other words, I know for a fact that on most days, not all days, the market's going to go a little bit above and below the opening price. That I know for sure. Because on most days, you can see it. On most days, the market goes a little bit above and below the opening price. That's a fact. So if I define something that can exploit that, the only question I have to ask myself is, well, I know it happens. This is a fact. It's a normal thing for the price to be on both sides of the opening price a little bit. The real question is, can I convert that into making money over time? Is it actually worthwhile to do it versus the other alternatives I could use? Because literally you could do that on every single bar on a daily, on an intraday chart. You could look at a 1 minute chart and say, okay, every 1 minute I'm going to buy at the open and then blah, blah, blah. You could try that. It's not going to work that well. I can promise you that, but you can try it. It's going to be horrible, actually. You're going to lose money on that. On the daily chart, it works a little better because you got more time and you can be more precise. Well, 5 contracts is aggressive because you're trading 500 shares. So what if you're trading this stock, 500 shares, this stock can move in less than $1 ranges in a day. So this one wouldn't be that risky to trade 500 shares. But if I switch this over to NVIDIA, doing 500 shares of NVIDIA, that's a lot of money. 500 shares of this is a huge amount of money. Think about it. 100 shares of NVIDIA is $47,879 right now. Okay, just 100 shares. So if you're trading 500, you've leveraged more in that options trade than you could actually trade in the stocks because the buying power for the stocks is limited to 100,000, just like the options. But because the options are leveraged, you're actually able to leverage a position that's larger than what your buying power truly could afford. So what dictates if it's too much, Elizabeth, is the size of the stock. If you're trading a big stock, you got to really think about that. One contract in NVIDIA is enough. You trade two, this stock can easily move $10 in a day, which could wipe you out. Think about that. Uh, if you have 5 contracts of NVIDIA, that's the equivalent of 500 shares. The stock moves $2, you're down $1,000. $3, you're down 1,500. $4, you're down, etc. Right? Yeah. So one of the bigger mistakes, and this is the next part that you guys got to work on, is you got to look at your trade sizing. And there's a video that I created that goes over trade sizing. What trade sizing means is that I look at how far a stock is moving up and down, and I choose a trade size that's small enough where I don't get wiped out of my trade if the stock moves a modest amount. Okay, so in other words, every stock has fluctuations in price. There's no way you're going to get in and the stock only goes your way. It's going to go up and down. It's going to go against you and for you. So if I'm in JD, as an example, if I'm getting into JD and I see how far up and down these bars are spaced, in other words, how tall are their bars, right? If they're 5 cents wide, which these are about 5 cents, I'm looking at the price scale over here, and they're about 5 cents increments. So that gives me a quick way of judging how much room there is on each of these bars. So it's about 5 cents. Okay. So if I got 1,000 shares of this stock, that will cost me about just over $28,000, which is easily doable with $100,000 of buying power. So that's not an issue. But if the stock moves against me by 5 cents, how much did I just lose? A 5 cents move against you, what's your loss on 1,000 shares? Anybody? What's your loss on 1,000 shares if you go 5 cents against you? $50, right? Okay. So $50 is a tolerable loss if you've got $500 you can draw down a day. That's acceptable. But if it goes more than that against you, in other words, if I'm getting in here on the chart, let's just use this as an illustration. If I saw the move up, then it paused, then it resumed here. Let's say I got in here, right here. If I'm in at 28.70, my stop loss is actually going to have to be about here at 28.55. So that's 15 cents. So if I have 1,000 shares, I'm going to lose $150. Now maybe I'm okay with that. Okay, $150 is not a huge loss. But maybe I want it to be a little bit less. Maybe I want to keep it to 100. So how do I do it? Well, I do a little simple equation. I take my calculator and I say, what is $100 divided by 15 cents? It's 666 plus the spread, right, Stephen? So if I'm doing the stock in this case, then I could do 666 shares of JD, get in at the price 28.70, risk a 15 cents per share move against me, and if that happened, I would not lose more than 660 or more than $100. That'd be my maximum loss. Now, obviously, I want the stock to go further than 15 cents in my favor. So let's see how far it went. So it went 5, 10, 15, 20, 25. So it went 25 cents in your favor, which is acceptable. So that would mean that if I did that, 666 times, let's just say 22 cents, because you're probably not getting out right at the high. So you made 146, right? Not bad. That would be reasonable. So you got a 1.4 to 1, 1.46 to 1 win to loss ratio on that, meaning that in your actual outcome, you were risking $100, you're able to pull 146. That's a good ratio, right? So all I did was I calculated how far I thought the stock might go, which of course I gave you the targets for JD, so you already knew that beforehand. We got a pause and then a resumption. You get in, you're looking for it to go to $29. It gets close to 29 bucks, but then fails and starts to pull back. And you say, you know what? I don't know. Maybe I should stay in. Maybe I shouldn't. But whatever you decide to do, if you decide to get out at that point, then you walked away with about 146. But your original risk was $100 if you did 666 shares. That's called position sizing. Position sizing means I look at how much I want to risk. I give the number as 100. I divide that by the distance from my entry point to my stop. So if my stop loss is $1 away, then that's divided by 1, which means I can do 100 shares. Or if it's $2 away, then I can do 50 shares, right? So from my entry point to where my stop loss has to be, which we always say, we want to get, if we get the resumption, we want the stop loss to be just below where the consolidation occurred, which is right there. Okay, this one's pretty easy because it's so clear. So if that's what I'm doing, or if, let's say I spotted it earlier and it started to resume roughly over here is when you'd probably be convinced it's resuming. So let's say you got in at 28.45. Well, in that case, your stop loss will be about there. It could be a little bit higher, but let's just say 28.33. So you're in at 45. Your stop is at about 33. So you got about 12 cents of risk, and you're looking for it to get to target number 1 of 28.58 at the time. So that would be a decent trade because you're risking 12 cents and you've got about, sorry, what's the number there? Well, actually, it's about even there, 13 to 12. Yeah, so it's not actually that good of a reward to risk. So in that case, you only had about a break even on that. But either way, if you thought it would go farther, if you thought like realistically can go beyond that, then in that case it would make some sense. All right. All I'm trying to do is make sure we understand the basic process. Let's just review. The process is first look at the emails. You have all your resources. They tell you where everything is. The first step is to go through all the stuff that is on the funder dashboard. That's your first primary step. You want to go through the funder dashboard, make sure that you are going over everything that's in there. Everything. Okay? Familiarizing yourself with your stats, looking at what the reports are saying. Once you have that, your next step is to start trading. Now, there's some videos in the folder in the coaching room that will help you to learn some basic concepts. So I would definitely encourage you to watch some of those videos. It will take a long time to watch all of them, but the ones that are important are position sizing, strategy analysis, position sizing, how to use stop losses, how to trade momentum, the essentials. I got 2 of those. right? You can't put stop losses on options, unfortunately, only on stocks. Now, once you have watched some of the videos in the folder, right? Now you got the basics. Okay. I'm going to create a playlist for that over the weekend so that way I can just share a playlist and you guys always will have the, um, you'll have an easy way to keep track of that. So you know what the main ones are. Um, so once you've gotten the basics down, now your job is to go into the coaching room and trade. You're going to do some trades on your challenge account based on the essentials of what I taught you. You ask some questions, you monitor the stocks that point out, etc. Right? You start generating some statistics. Once you have some stats, now you can look at prop reports and see how you're doing. Really look at the detailed view of what you're doing. Look at what's your win to loss ratio, what's your bat percent, are you doing better buying calls or puts, going long or short? Which stocks are you doing well in? Which stocks are you doing poorly in? What time of day are you trading better in? What time of day are you trading poorer in? Those stats are basically the secret formula to why most people who get funded, they're paying close attention to those details. They're skipping out trading times a day where they know they typically lose. They're avoiding stock symbols that are not working out for some reason. If they're terrible at going short for some reason but do great going long, they stop going short. But honestly, guys, it just comes down to the stats. The stats are what are going to tell you how to get to success. Now, what I do is I give you a tutorial in that folder, intro to prop reports. Plus, I do regular, I do regular reviews of people's reports to point out some things that you're doing right or wrong, which I'll resume next week. And then the other thing is, once you've started to do some trading, make sure that you're paying close attention to your outcomes. In other words, make sure you're documenting the reasons why you're getting into trades. Keep track of what was the actual cause of the entry. Now, this is something that is usually overlooked, but if you don't know why you're getting into trades, if you don't have some systematic approach that you understand why you're doing what you're doing, if you don't have that, then there's no way for you to figure out how to improve because you won't actually know what you're doing wrong. You won't actually understand where your flaws in your trading are. We don't want that. We want you to be clear, concise, understanding what's going on. So it doesn't mean that your strategy is necessarily the right strategy at first. It just means that you understand what it is you need to do because you've been doing the things. Like you know what you've been doing. So now you can say, okay, well, that's not working. Let me try something else. Let me do something else. Okay. And while you do that, okay, as you're doing that, right, um, that allows me to give you some real constructive feedback because if you're not really tracking what you're doing, you have no idea, and you say, hey, I just need some help, like just help me out. When I start asking questions, you got to have some answers, right? You got to know what you're doing. So if you don't know what you're doing to some modest extent, then it's going to be very difficult for anyone to actually help you improve, right? So just bear that in mind. You want to make sure that you are very aware of why you're making your decisions. You're actually writing them down, right? Keeping a journal of some kind doesn't have to be exquisitely detailed, but just a journal that's enough to say, hey, that's why I did what I did. If you're not reviewing your trades every day, every week, if you're not really spending a lot of time on this and treating it like you're in college, like, if you went back to school, let's say you wanted to get a new degree or something, I know how you would treat that. If you're not treating this like that, then you're in trouble. You have to put time in order to fix those mistakes because remember, you're trained to be a professional, and the only way to be a professional is to treat it as a professional would, which is you know what you're doing, why you're doing it, you're not messing around, you're keeping yourself on track. Well, the platform, look, if you're asking questions about True Edge, the main place for information are the videos that are on the YouTube channel, where I mean, basically every time questions come up, Danny asked me to make a new video to address those questions. So pretty much if you're thinking of it, it's probably already been asked. So there's a playlist of videos on the Funder YouTube channel. Well, what you're doing wrong, this is the place to ask that. Yes, you don't, in other words, trading related stuff, you definitely ask me, and this is the place to ask. That is correct. So that's the purpose of the coaching room, to deal with that stuff. All the basic stuff that obviously you weren't referring to that, but all the other stuff like what's my password and I can't, my software went down, etc. Contact the help desk. That's what they're there for, right? So a lot of us are asking me questions here, like, hey, how do I do this again? Just ask the help desk. That's what they're there for. They actually are paid to answer questions all day. So we want them to be used. So contact them. Don't call them. Email them or message them. The only time you should be on the phone with them if it's something they really need to closely walk you through. Otherwise, if you email or message them, they can answer much, much faster. So yes, so Elizabeth, I can always review your trades next week. Yeah, that's fine. But but have you, as far as that video about trends and entries, etc., in the folder, I'll repost them. Make sure you've watched those because that's really the crux of what you're doing. So remember, we have things that we see, but the market doesn't care what I want it to do. It always does what it's going to do. So I have to know what to do when I see an opportunity, how to approach it, and when to cut loose. Those cover the basics. So make sure you guys are watching those. All right, I'm going to wrap up for today. The markets should already be closed. Yep, so we are done for today and done for the week. Enjoy the rest of your weekend and week, I guess. And I'll see everyone on Monday, regular schedule for everything. Okay? Other than that, folks, hope you had a great Thanksgiving. Take care. I'll upload this video later today.